What if I told you the single biggest reason you're bleeding money in the markets has almost nothing to do with your strategy, and everything to do with the number in your trading account, but not in the way you think? You're not losing because you're a bad trader. You're not blowing accounts because you can't analyze a chart. You're losing because your psychology shatters the moment real money is on the line. Pause for just 10 seconds. No scrolling, no skipping ahead. Close your eyes and ask yourself truly, am I trading with a clear, focused mind, or am I wrestling with the terror of another loss every single day? Welcome to Mind of a Trader. Today, we're not just talking numbers. We're dissecting the very soul of your trading. I want to share a true story. A good friend of mine, an engineer, brilliant, logical, a master of calculation, a man so rational he was almost cold. He'd mastered every pattern, back-tested hundreds of trades. His technical analysis was like code embedded in his DNA. He won in the past, won on paper, won in demo accounts. But when real money hit the table, he imploded. Not because his analysis was wrong, not because his strategy was flawed. He lost because his hands started to shake, his heart hammered against his ribs, and his mind spun out of control, all because of a single red candle. I remember that fateful day, his first trade, a $20 win. His eyes lit up like a kid hitting the jackpot on his first arcade game. Second trade, a $50 loss. His face fell. Third trade, he held on praying the market would turn, riding it down deeper and deeper. Fourth trade, a revenge trade, pure emotion, no logic. End of day, account down over $250. He stared at the screen like it was a gaping abyss. No words, no curses, no sadness, just a crushing silence. A moment later, he turned to me, voice choked. Why, I knew it was going down. Why couldn't I cut it? My analysis was right. Why did I still lose? I didn't answer immediately. I just looked at him, and in his eyes I saw myself from years ago. I understood. It wasn't a lack of knowledge. It wasn't stupidity or a lack of skill. It was simpler and far more brutal. He was trading with the wrong amount of capital for his current psychological fortitude. With a mind not yet steeled for this game, do you know the most terrifying thing in trading? It's not the loss itself. It's not misreading the trend. It's not even getting stopped out by a sudden spike. It's being right in your analysis and still losing money because you didn't trust yourself. You didn't have the courage to hold the trade or cut it when your plan dictated. Why? Because you're trading with money you are terrified to lose. Money for your kids' tuition, the rent, the mortgage, your parents' medical bills. Money for survival. And because it's so precious, fear cripples you. From that moment, you're not a trader. You're a gambler betting the farm. Every candle makes your heart skip. Every price tick is a breath held, a prayer whispered. You're not analyzing anymore. You're begging. And let me tell you something, the market taught me the hard way. The market doesn't hear prayers. I've been there. I once funded an account with $200 thinking it was my ticket to a new life. I made 40 losses and thought I'd cracked the code. Then I lost $100 on a single panicked click. Greed, fear of loss, pinning too much hope on too little capital. That's when it hit me, the amount of money you trade with dictates your psychological state. You're not weak. You're not bad at this. You're just carrying a weight too heavy for your current strength. So how much money do you need to trade without your psychology self-destructing? We'll get to the heart of that. But first, have you ever asked yourself that simple yet profound question? How much is enough for me to trade with a calm heart? To not clench my fists when price reverses? Not hyperventilate when a trade is in drawdown? Not break down over one wrong click? I used to think more money will make me less scared. So I added $200, then $500, then $1,000. But you know what remained? That gnawing fear, that constant anxiety. The tight knot in my gut, the sleepless nights staring at charts I wasn't even seeing. I wasn't afraid of the market. I was terrified of losing money. And when that fear eclipses reason, you are no longer yourself. I vividly remember one evening, a small sell order down just $30, but I held onto it like it was my lifeline. 3 hours glued to my computer, sweat-dripping hand clamped on the mouse like a drowning man clinging to driftwood. No water, no blinking, terrified to look away, convinced that if I did, my account would vaporize. I wasn't trading. I was imprisoned by my own fear. I took this question to a mentor, a man who'd weathered over a decade of market storms. "Sir," I asked, "how much money do I need to stop being terrified when I trade?" He looked at me, eyes deep as the ocean, and just smiled. Then he asked, "Would you dare to put $10,000 in your account, but only trade 0.01 lots?" I was floored. I didn't get it. He said slowly, "It's not about how much you have. It's about how much you can lose and still sleep soundly at night. Your psychology isn't tied to your account balance. It's tied to the portion of risk you can accept without trembling." And for the first time, I truly understood. I funded an account with $1,000, but this time I committed to risking only $5 per trade. Miraculously, I felt a calm settle over me. No more rushing, no more frantic obsession when the chart bled red. No more blaming the candles as if they were plotting against me. Because $5, I wasn't afraid to lose $5. I accepted it as a potential cost of doing business. And only when my psychology wasn't under siege could I finally see the market with clear, rational eyes. We don't lose because we lack strategy. We lose because every click is tethered to a primal fear of survival. A friend of mine was trading with $500, his family's living expenses for 3 months. "Just a few winning trades," he'd say, "and I can pay rent school fees." My heart ached for him. I told him, "Stop, before trading turns you into a prisoner of your own making." So what's the magic number? It's not $1,000 or $10,000. It's the amount you can afford to lose without it damaging your life, your peace, your sleep. Whether that's $50 or $5,000. If entering a trade doesn't make your breath catch, if a loss still allows you to sleep soundly, that is your capital. Only when you're not afraid to lose can you truly begin to win. If this story is resonating, if you're nodding along, don't forget to hit that like button. Let's share this understanding. And if you know someone trapped in this cycle, share this video. You might just save them from a world of pain. Thank you. If you've ever traded in a state of panic, you know this. Your greatest enemy isn't a red candle or bad news. It's the loss of control within you. In those moments, what keeps you standing isn't technical analysis or a guaranteed signal. It's a robust capital management system, not to get you rich quick, but to ensure you survive the market's worst onslaughts. What is this system? It's simpler than you think. It's how you slice your risk. Rule 1. The 2% lifeline. For newcomers, etch this in your mind: never risk more than 2% of your capital on a single trade. On a $1,000 account, that's $20, no more, no exceptions. This is the line between having a chance to recover and blowing up. Rule 2, survival rounds. I divide my capital into, say, 6 equal parts. Survival rounds. I only deploy 1 round at a time. If it doesn't perform, I don't reload. I stop. Analyze. Learn. I don't add more average down blindly or revenge trade. Only when I'm certain I've learned the lesson do I engage the next round with a renewed mind. This strategy has carried me through the most brutal losing streaks and made me stronger. Rule 3, discipline DCA dollar cost averaging, but not as a prayer. Many think DCA means just keep adding to a losing position. Wrong. True DCA is disciplined. Only consider it with technical confirmation, a clear plan for each level, and crucially to mitigate overall risk, not out of blind hope. DCA without a hard stop is digging your own grave. Rule 4. The ultimate sanity check. Never ever trade with money you cannot afford to lose. If it's for your kids' education, your parents' health care, this month's rent, close the platform, don't trade. Because if one loss makes you lose sleep, your entire meticulously built system will crumble overnight. You're no longer trading with reason, you're trading with raw fear. Your capital system won't make you rich overnight, but it will keep you in the game long enough to become truly skilled. My friends, after all the analysis, the questions, the soul searching, it comes down to this: it's not how much money you have, but how solid your inner foundation is when you're holding it. Some people place a $50 trade and their heart pounds like a war drum. Others trade $500 with clear eyes, a calm spirit, a steady hand. It's not the number that makes you tremble. It's the lack of inner fortitude to remain peaceful amidst the storm. Trading is not just a numbers game. It's a profound test of self-understanding, self-management, and self-development. The right capital isn't what makes you rich quick. It's what allows you to trade without fear. To find that number for yourself, ask these 3 questions. Every seasoned trader has wrestled with. 1. Is this money I am truly willing to lose? If you're not prepared for loss, you're not mature enough for gain. Don't gamble with your life's necessities. The market is a place to cultivate maturity, not to pray for miracles. 2. Do I depend on this money for my daily survival? If yes, stop. No one goes into battle with the anxiety of where their next meal is coming from. You need money, yes, but don't let that need suffocate your mind every time price moves against you. Freedom from survival pressure is freedom to trade correctly. 3. If I lose this, will I be clear-headed enough to analyze, learn, and move on? If one loss ruins your sleep, if you're consumed by revenge trading, instead of learning to let go, you don't need a new strategy. You need a break. Trading demands resilience, not reckless abandon. It needs those who can get back up after a fall with a clear head and an intact spirit. If you answered no to any of these, turn off MT4. Not to quit, but to recover. Not to run, but to rebuild your inner strength. Take a walk. Sit in silence. Ask yourself what you're truly chasing. Peace is always there when you stop chasing the ephemeral. You need a number that doesn't make your hand shake. A number where, seeing a losing trade, you can still take a breath and smile faintly, knowing it's just one hand in a long game. You're on a marathon, not a sprint. And you're not alone, because here at Mind of a Trader, I'm walking this path with you step by step through every chapter of the market and of life. Choose a sum that doesn't make you a millionaire overnight, but allows you to live a life free from fear. Trading is a journey. Done right, it's not just about making money, it's about profound personal growth. Thank you for journeying with me to the end of this discussion. If what I've shared has resonated with you or simply made you feel less alone on your trading path, then I believe we've truly connected. Continue this exploration with me, with Mind of a Trader. In our upcoming videos, I'll share more stories. More real, sometimes more painful, but always filled with hope. I look forward to seeing you in the next part of our journey.